Hi, this is P.R. Sundar. Welcome to this special episode where I'm going to discuss some issues with Sharath. So, Sharath has few questions. Sharath?
Yes, sir. So there are a lot of uncertainties during the past 4 years, sir. So we saw continuous interest rate hikes for the past 4 years, and after a very long time, US yesterday gave us a surprise. Can you please elaborate on that?
Yeah. 2020, because of coronavirus, most governments printed extra money, they distributed to the people. So because of that, the money flow was higher with the people. So that has led to higher inflation. So because of a higher inflation, US kept on increasing the interest rates. I think 10 times or 11 times they increased the rate. From almost 0% to 5.25, 5.5%, they increased the interest rate. Because their inflation once in 2022 went up to 9%. And then because of this huge inflation, huge interest rate, now the things have turned to the worst. The situation came, US can go into economic recession. So when that situation comes, the inflation also started coming now. So now the US Fed is just like a central bank, here Reserve Bank of India, like that they have a Fed. So they started cutting the rate. So yesterday, first time they cut the rate. It was predicted that Fed will cut 25 basis point or quarter percentage point by 100% of the people, and 67% of the chances was there for a 50 basis point cut or half a percent cut. But the Fed has actually surprised the market by cutting the rate by 50 basis points. So it is definitely a positive thing for the market. So that's why US markets also hit a fresh all-time high yesterday. Then after that some profit booking came. And today is Thursday when we are shooting this video. And today in Indian markets also, Nifty also hit a fresh all-time high. Then because of some profit booking, markets came down a little bit. So definitely this is good for the markets.
Thank you, sir. So we kept saying that market is at a overvalued territory, or there is some froth in the market. But we said that markets might go down, but it is not acting as if we want it to be. Markets are hitting fresh highs. How are you seeing it, sir?
And see, when we say market, there are certain segments of the market. One is a Nifty 50, which consists of the large cap stocks. The other one is mid cap, small cap, penny cap, micro cap, So definitely we have been saying for the last few months, the markets are in a frothy position. The valuations are very high. So we have been exercising caution. Okay. But that is largely for micro cap, small cap stocks. And however, when the people insisted they want to buy some shares, so we have also been recommending them, they can go for defensives, so those defensive sectors have delivered a good return for the last few months. So the same thing only we are also telling now. Even now, we are not recommending any mid cap, small cap, or micro cap where the valuations are very high. However, large caps also, there are some stocks available at a decent valuation you can consider, but at the same time, if you are an investor, you only buy on the dip. Okay, I always say don't catch the running bus. Wait for the bus to stop. Say for example, TCS has fallen about 4% yesterday, and today it has fallen another 1%. So about 5% fall has happened in TCS. Then I started buying some shares in TCS. So even if this 5% recovers over a period of next 3 months also, that gives me an annual return of about 20%. So if you are an investor, look for the value, okay, look for some kind of a correction to enter the market rather than chasing the running bus.
Thank you, sir. Whether we will also follow the rate cutting cycle that has been initiated in the US, or will it take some more time for Indian Central Bank to act on the interest rates, sir?
Right now, the expectation is that, RBI may cut the rate sometimes in December, And that too, they may not be cutting as aggressive as US. So probably they may cut quarter percentage point or 25 basis point. So that is the expectation. And because we on the way high also, we did not increase the rates aggressively. So therefore, on the way down also, we will not be cutting down the interest also very aggressively. Right? But however, our markets are bullish even without this rate cut. So one statistic says, as and when the interest rates went higher, and then when the interest rate hiking cycle was over in US, when the interest rate cutting cycle started, after the first rate cut, in the next 6 months, US markets have delivered about 10% average return in the past. So therefore, I'm expecting US markets to give 10% return over a period of next 6 months. And then, India is also likely to follow them. So whether in the interest rate they are following US or not, definitely markets they will follow the US.
Thank you, sir. We have seen too many good things happening over a very short period of time. So there are a lot of uncertainties panned out. So we have state elections coming in the next couple of months. We have US elections happening, and there was a threat to one of the US presidential candidates. So how are you seeing these risks pan out in the stock market, sir?
See, every now and then there will be certain issues, So the markets don't go in one straight line up. It goes up, comes down, goes up, comes down. So that's why we say that, if you are an investor, you don't chase the running bus and wait for some correction and enter the market. So corrections are always healthy for the next leg of the bull rally. So the markets are definitely bullish, right? I'm expecting, Nifty to be somewhere between 26,000 and 27,000 by March 2025.
Thank you, sir. What will be the effect of interest rate cuts on stock specifics in Indian markets?
See, generally, the stocks can be classified into two groups. One is a defensive, one is cyclicals. So defensives means, IT, pharma, FMCG, these are all like defensives. And infrastructure, banks, real estate, automobile, they are all considered to be cyclicals. So generally, if the interest rate is on the downward trajectory, the cyclicals tend to do better. If the interest rate is on the upward trajectory, the defensives tend to be performing better. So my opinion right now is that, you can take some risk by getting into cyclicals in the large cap space only, not the mid cap. Even in the large cap space also, look for the valuation. Where there is a valuation comfort, cyclicals can be looked into. During next 6 months, I expect the cyclicals to outperform the defensives.
Thank you, sir. On anticipation of this news, for the past 2-3 days, banks have outperformed the other market segments. So how are you seeing this, sir?
Yeah, as I told you, banks are considered to be cyclicals, and moreover, since the budget, so the banks have been underperforming, and now IT is taking a backseat and the banking are catching up. So I think this catch-up story is likely to continue going forward. And because, last time when Nifty hit all-time high of 25,078, that time the Bank Nifty all-time high was about 53,300. Now Nifty has shot up more, but Bank Nifty today only, it went very close to all-time high. Again, some correction came. Going forward, definitely private sector banks are expected to do better.
Thank you, sir. With all this good news, when can I expect some of the respite for my home loans, vehicle loans, etc., sir?
You can expect some kind of a reduction in interest rates, maybe sometimes in the month of January 2025.
So 3 more months to go.
Yes, correct.
Thank you, sir. Thank you for answering all the questions. We will meet again next week. Thank you.
Thank you.